Hello everyone, my name is Dr. Kismet. I am Associate Professor in CGC Landra Mohali. So today we are going to start the introduction to accounting. So every day in every life, in every like a layman business, we do accounting. It may be a purchase of a pencil, it may be a purchase of your grocery, it may be anything. So basically accounting is linked with the business, but it is not only linked with business, it is with your daily transactions which you commute, which you purchase and buy things, or you sell things on your daily basis. So basically we will start with the introduction of accounting. So what is accounting? So it can be defined as a process of reporting, recording and interpreting, summarizing economic data. Now here economic data means that things which we can calculate in the terms of money, not in qualitative forms but in quantitative forms. We can measure in monetary forms. So the introduction of accounting helps the decision makers of a company to make effective choices. It may be providing the presentation on a financial statements of a business. So financials, we make financial statements at the end of the financial year. Now here the financial year describes from 1st April to 31st March. So during this duration, any transaction, any commodity which we purchase or which we sell, that transactions are recorded in the books of accounts. So that transactions are known as accounting. So next we will come to the users who basically use this type of accounting in the business concern, or the various interested parties who are interested in what the business is going through this financial year. So first is why the shareholders are interested. They wanted to know the money which they have invested, whether it will be able to give their profitable returns in the financial year or not. So is the company profitable? They wanted to know whether they will get the returns out of the money which they have invested. Is there enough cash to meet payroll needs? Now payroll needs means the employees which are working in the organization, whether the organization is able to repay the payments for the services which they have get from the employees which they have hired. Now how much debt does the company have? Debt means the payments which the company have to make to the outsiders, the creditors. Do the company have sufficient assets or sufficient cash inflows which they can pay to the cash outflows in the form of creditors to the outsiders? How does the company's net income compare to its budgets? So all these things are included in the monetary terms of the business accounts, and the interested parties are interested to know whether they will get the returns from the investment which they have made in the proper financial year. Now according to the AICPA, that is the organization, according to this, accounting refers to the recording, classifying and summarizing in a significant manner in terms of money, transactions and events which take part in the business accounting financial year. So एक साल में we record the transactions, we classify them. Classified of the transaction means the accounts that are to be in the form of personal account, real account, or it's a nominal account. So all the accounts are to be classified, they have to be recorded in a specified terms. Now what is the difference between bookkeeping and accounting? Bookkeeping basically refers to the recording of transactions in a book of accounts. It may be your journal, it may be your ledger, or it may be your trial balance. But accounting refers to the when the transactions are classified and summarized according to the type of accounts which are involved in the transactions. The bookkeeping deals with identifying and recording financial transactions only. So bookkeeping, it only describes the recording of transactions and the identifying the transactions. But on the other hand, accounting refers to the summarizing, interpretation and communication of the results which the organization faces or which the organization analyzes after the financial year. So after the end of the financial year, when the balance sheets or final accounts are prepared, then the organization or the management of the organization comes to know whether the organization is running in profits or in losses, how much the assets are there, how much liabilities are there, whether the assets are equal to liabilities or the assets are less than the liabilities. If assets are less, then the organization is in losses and they may have to close down the business. Now, bookkeeping data provided by bookkeeping is not sufficient for decision making. So, when the management wants to make the decisions, it cannot make the decisions only on the basis of the transactions which are recorded in the bookkeeping. But for making the decisions, they have to go for the accounting. In accounting, they have to analyze how much assets are there, how much liabilities are there, whether in the financial year we have sufficient assets so that we can pay the liabilities in the form of creditors or in the form of debtors. Last, not done in the case of the bookkeeping. So in case of bookkeeping, we do not do the analysis or we do not make the graphs or charts on the basis of which the management can take the decisions. But in case of accounting, a proper flow chart is prepared, how the transactions are recorded and how we come to the decision of the whether the business is running in profits or in losses. Next, no analysis is required in the bookkeeping. So as we have discussed earlier, there is no requirement of doing the analysis in the bookkeeping because we do not do the analysis, we do not do the analysis part for the purpose of interpretation or for the purpose of doing any type of research in the bookkeeping. But in accounting, we do the analysis of accounting in the form of making graphs, or it may be presented in the form of tables or graphs so that the management can take the important information and make the decisions. So the person who keep the bookkeeping is known as a bookkeeper, and the person who takes into account the accountant is known as the accountant. So bookkeeping does not show the financial position of the business. However, accounting, it shows the financial position of the business. Now, financial position means how much assets and how much liabilities are there. And last is no high level is required. So in bookkeeping, no high level risk is involved, only they have to record the transactions. They are not required for any type of analysis or interpretation. But in accounting, we do the analysis and we do understand the terms which we record in the books of accounts. So we do the transactions in the form of any type of accounts which we record. It may be a personal account, it may be a real account, or it may be a nominal account. So any type of accounts which are recorded, it is not analyzed in bookkeeping, but it is analyzed in the accounting. Now, these are the basically types of accounting. First is financial accounting, cost accounting, tax, auditing, and accounting system. Now, these type of accounting is we study in different semesters. First is financial accounting. In financial accounting, we only study the books of accounts, we study the basic trial balance, we study journal, ledger, balance sheet, and financial accounts. So in financial accounting, we come to know the financial position of the business. Cost accounting, in cost accounting, we determine the various cost which is involved in the production of any good or any service. So if we are in the production sector, then how much cost is involved in the production of one particular unit. So in making the one particular unit, how much labor is involved, how much material is involved, how much expenses are involved. So expenses may be direct or indirect. So all the expenses which are involved or which are calculated are in the cost accounting. Next is management accounting. So management accounting basically deals with the decision making power of the management and the future prospects. What is the cash flow, what is the fund flow, how we have to utilize the funds so that we can make the profits in the near future. Tax, so how much tax we have to pay, what are the various articles in which we can get the rebate, or what are the various schemes in which we have to pay the tax, what are the various terms and conditions. That is a taxing. Auditing, so we do the auditing at the end of the financial year. So what has to be included, what has to be excluded, and these transactions which we do in one financial year, these transactions has to be cross verified with your vouchers and with your bills so that there is no fraud in the transactions. There should not be any duplicacy of the transactions in the books of accounts. Next is the steps of accounting process. How we do the analysis and preparation of financial reports from first step to the end, how the management takes the decisions. These are the various steps. First is identification. So identification means we have to first analyze and identify the transaction which is taking place in the business. So very first transaction when we do the business, it is the commencement of the business. It means we have to put some money, only then we can start a business. So it is the money which is invested to start a business, that money is known as capital. So that in the first form, we identify the transactions which we have to record in the journal book. Second is recording. So we record the transactions in a journal book. So after recording in the journal book, we do the classification. Classification means we have to segregate the transactions on the basis of the nature of the transaction and the type of the accounts which are involved. So type of accounts, it may be your personal account, your nominal account, or your real account. Next is summarizing. In summarizing, we prepare the trial balance and financial statements. So trial balance, it includes your debit and credit side of your ledgers which we prepare on the basis of the type of accounts which are involved in the business. After trial balance, we prepare the financial statements. So financial statement includes your cash flow statement, your fund flow statement, and your trial balance and your trading account, and last is the balance sheet. So balance sheet, it includes your assets and liability. So in the balance sheet, your assets should always be equal to your liabilities. Next is analysis and interpretation. So it includes your financial reports so that it maybe end up with some meaningful conclusions. So we do all these steps in order to frame out the reports which are helpful for the management so that they can take the decisions for the future events or the future projects of the business concern so that they can make the more profits. Last is communicating information to the users. Now there are different users who are actually interested in the business transactions. So in one financial year, a business may come to know what are the various aspects or in which we can go for so that we can make more profits. So the various interested parties are interested to know whether the business is running in profits or in losses, or what are the various difficulties which one business comes to know and how they overcome these problems, what are the various solutions of that problems. So next, these are the users who were actually interested in the accounting information of any business organization. First is the owner or the shareholders. So as the owners and shareholders are interested to know whether the business is in profits or losses. So if the business is in profits, only then they will continue for a long term of period. If the business is running in losses, then they will make more efforts so that the losses can be reduced and profits can be increased. Next is the managers. As managers are hired to be paid, so they will be paid better only when the organization is running in profits. Prospective investors means those investors who are looking for making the investments. They are having money, they are having funds, but they don't know where to invest. So if a business is running in profits, they are giving more returns to the shareholders, then prospective investors can be attracted towards that particular business and they can make their investments. Creditors, bankers, and other leading institutions. So these are the organizations which pay the business concern some funds so that they can make some profits in the form of interest. So bankers can give loans, it may be for the short term or it may be the long term, to the business concern. So government is also interested to know whether the business is running in profits or losses, because it eventually or it helpful for the financial growth of the business or for the financial growth of the country. Employees. So employees are hired in the organization, so they will be paid well only if the organization is running in profits. Regulatory agencies, researchers, and customers. So these are the various interested parties who are interested to know whether the business is running in profits or it is running in losses, or if the business is having some problems, or it is having some kind of financial indicators which may affect the business concern, so they can be informed. Now these are the some basic objectives of accounting. First is accurate bookkeeping generates information for your business needs. So we have to very particular about keeping the books of accounts in a proper manner so that they can generate the profits which can be distributed to the investors, which can be distributed to the employees, to the government, shareholders, to the owners of the organization, and that information or that particular profit can be your information for the business requirements. So what are the various business requirements? It may be for the future growth, or it may be for the long-term effectiveness of the business, or for the payment to the creditors. Now these are the various objectives of the accounting. First is identification and recording of transactions. So we have to identify the various types of transactions which have to be recorded, and these transactions has to be recorded in a proper format which is prescribed by the institutions. Ascertainment of results. So we do make some objectives and goals which have to be fulfilled by the business concern in a one particular financial year. So those goals and objectives should be very clear to the employees so that they can work according to those goals and objectives, and it can be fulfilled in a very short duration of time. Ascertainment of financial affairs. So financial affairs, it is basically described as the profits of the business concern. So every business is started with the viewpoint of making profits. So if it is not making profits, then there is no use to run that business concern. Keeping accounts of cash. So we have to take into consideration each and every penny which comes and goes out of the business concern. No business concern can run successfully without making a proper check on the cash which is coming in or which is going out of the organization. Control over assets and liabilities. So assets are basically the property which is hired, which is owned by the business, and that property is used for making the profits of the business concern. That is known as the assets. And liabilities means those things which we have to pay or which we are not owing. The payments which we have to make to the creditors are the liabilities of the business concern. So at the end of the financial year, when we make the balance sheet, assets should always be equal to the liabilities. Controlling money defalcation and control and cost. So we have to control the money and control the cost which is involved in making the, or which is involved in the production of goods and services. So services are the intangible things, we cannot produce those things, but we have to spend some money for making the services or for providing the services to the customers. But for the production of goods, we have to choose very particular about the material, very particular about the employees or the workers which are involved in making the, or which are involved in the production of goods. Providing economic data. So economic data is very important for the researchers, for the government, for the employees, for the investors, because they are basically based on the economic data so that they can make future prospects. If the investors want to make investment, they will first study the past record of the organization, how they are performing, whether there is a scope of growth or not, whether the organization is paying proper interest and dividend to the investors or not. Helping tax fixation. So we have to pay tax to the government so the government can make work for the welfare of the society. So we have to make payments for the tax also. Determination and evaluation of policies. So policies, rules and regulations have to be maintained for every type of organization. So policies are to be evaluated from time to time. If there is any deficiency in the formation of policies or in the effectiveness of the policies, then time to time review of the policies should be done so that the deficiencies can be removed and it has to be very effectively implemented. Testing the arithmetical accuracy of accounts. So the basically accounts deals with the quantitative values of the money. So money is involved, so there should be very accurate in the arithmetical accuracy of the accounts. For this purpose, we make the trial balance. So in trial balance, debit side of every transaction should be equal to the credit side of every transaction. So for every transaction, there are two aspects. One is debit and one other is credit. At the end of the financial year, the debit side of every transaction should be equal to the credit side of the same transaction. Acceptability to others. So the material, the data which is provided or which is recorded in the books of accounts, that data should be accepted to the interested parties. There should not be any fraud, or there should not be any duplicacy, or any type of question mark should not be arised in the minds of the investors. Creation of values and accountability. So the investors will only be wanted to invest in that business which is providing them accountability and which is providing them credibility, and it should be in such a manner that they should have such faith in the organization that yes, they will make the returns in a proper format, and it is very beneficial if we make the investments in such business concerns. Following legal binding and prohibition. If anything is going wrong in the organization, it should be stopped at that particular point only. There should not be any illegal business or illegal activities which should be carried out in the organization. Otherwise, it should be banned by the government, or the government may take the strict actions against the business concern. So these are the basic accounting cycle which is performed in the business concern. So we start with the cash, or we start with the identification of transactions. We have cash, only with the cash and credit we go for the transactions. So first we have to identify what type of transaction which we are going for. Suppose it is a purchase of furniture. So in that particular transaction, two types of accounts are involved. First is cash and second is furniture. So we have to record these transactions in the journal book. So when we record the transaction in journal book, then we have to post in the ledger. In ledger, we post the transactions according to the type of accounts which are involved in that particular transaction. All the personal accounts are posted in personal account, and real account transactions are posted in the real accounts. Then trial balance is prepared. Adjusted trial balance means we have to make sure the debit side of the trial balance should always be equal to the credit side of the trial balance. So there should not be any monetary or calculation difference in the transactions. Next, we make the financial statements. In financial statements, we prepare cash flow statements and fund flow statements. And after that, we make the closing entries. What is the closing balance to be carried forward, and what is the opening balance for the next financial year. So this is a new accounting cycle which is adopted nowadays. We identify and record the transactions as per the type of or the nature of the accounts which are involved. It may be real account, nominal account, or personal account. Then we go for the unadjusted trial balance. In unadjusted trial balance, if there is any deficiency in the debit side or on the credit side, we create an account that is known as suspense account. So that suspense account is adjusted against the entries which there is some errors. It may be some omission of recording any transaction, or it may be some calculation mistakes in the business account. So we have to adjust those entries and make the trial balance equal at the end. Then we make the financial statements. In financial statements, we prepare the trial balance, we make the trading and balance account. So balance sheet is prepared. So at the end of the balance sheet, assets should always be equal to the liabilities. Now next are the some principles which every business concern follows for making or recording the transactions or for running the business accounts. First is business entity concept. So business entity concept is basically means the business and the owner of the business. Both are different aspects. So if you start any business, your personal liability or your personal assets should not be the assets or the liabilities of the business. So business is having its own separate assets, its own separate liabilities. they have their own separate accounts, but the personal account or the personal cash of the owner of the business is not to be involved in the business aspect. So business and businessman both are different things. Next is money measurement concept. So we record only those transactions in business accounts which can be measured in money terms. No quality like motivation is not recorded in the books of accounts. We record only the turnover, we record only the cash inflows, cash outflows, what we are purchasing from the profits. If the business is running in losses, why losses are there? It means we are not having sufficient demand for the product. So we calculate each and everything in monetary terms. So if there is a transaction like Mr. H is hired as a manager, so in this particular transaction no money is involved, only this information is provided that Mr. X is hired as a manager in the organization. But if the transaction is like Mr. X is hired in the organization at a salary of rupees 50,000 per month, so it involves your money aspect. So that thing can be recorded in the books of accounts. So only money measurement concept is there, no quality aspect is recorded in the books of accounts. Next is accounting period. So all the books of accounts or the financial books are recorded according to the financial year or the accounting period. Accounting period, it may be your from 1st January to 31st December, or it may be your financial year from 1st April to 31st March. But all the business are recorded in the transactions are recorded according to the financial year, that is from 1st April to 31st March. Calendar year is not accepted. Next is going concern assumption. Going concern assumption means when we start any business, it may be your small business, medium or large business, we start that business with a particular motive that that business will run for n number of years. So going concern means the enterprise will continue in operation for a long enough to carry out its existing objectives. So when we start any business, we make some certain goals and objectives which we have to fulfill. So that goals and objectives have to be fulfilled only for a long period of time. We set these goals that the business will run for n number of years, not for 5 to 10 years. Next is matching principle. So in matching principle, we match the expenses with the revenues. So in one financial year, how much cash is coming in the business and how much cash outflow is there, whether the organization is running in profits and losses. So how the profits is calculated? If the cash inflow is more than the cash outflows, then the business is in profits, and if the liabilities are more, it means we are paying more, cash outflow is more and cash inflow is less, then the business is running in losses. So revenue and cost, that has to be matched with the books of accounts at the end of the financial year, and effort should be made that the business should be running in profits. If it is running in losses, then effort should be made ki at what particular time or at which step we have made a mistake and we are not running in profits. Next is dual aspect. Dual aspect means for every transaction we have two aspects, debit and credit. So if anything is coming in business, for return something is going out of the business also. So like for example, we are purchasing furniture or machinery. So if furniture and machinery is coming in the business, cash is going out. So for every action and reaction there is a opposite reaction. So for every cash inflow there is cash outflow. For every debit there is a credit. If we are taking loan, it means cash is coming in and we have to make the payment in the form of interest and in the form of principal amount to the bank. Next we have prepaid expenses and accrued expenses, unearned revenue and accrued revenue. So each and every transaction which comes in the books of accounts, it may be whether we are hiring some employees, we have taken the services but we are paying afterwards. It means we are paying after the getting the services of our employees, so we are paying, that is a accrued revenue. Not recorded in the books of accounts, only the monetary terms are recorded in the books of accounts. So materiality depends upon the size and nature of the item. So it depends upon the size and the quantity which we are purchasing. It should be recorded in the money terms. Full disclosure, each and every transaction should be recorded in the books of accounts, whether it is for the purchase of a pencil or for the purchase of a building. So the transaction may be of 3 rupees or the transaction may be of 1 lakh or up to some 10 lakhs. So each and every transaction should be recorded in the books of accounts. That's it. Thank you so much.